It's currently 7:05 a.m. I've been out of the market for about 15 minutes. I've already hit today's profit target. Okay. And the reason why I hit profit target so fast is, well, for a number of reasons. But what we're going to talk about is risk to reward ratio and why it's so important when you're day trading and how, and kind of help you guys to kind of come up with a strategy that can really be profitable for you guys in a very short period of time. Okay. While limiting your risk. Okay. So basically you have these things called gappers. Okay. And what we're talking about is stocks that have opened a new day at a significantly higher percentage than the previous day's close. Okay. So for example, the market closes on our time here on the West Coast at 2 p.m. or excuse me, 1 p.m. Okay. The market closes. So that's 4 o'clock East Coast time. So at the end of the day at 4 p.m., the market closes, okay? But there's still what they call after hours trading that takes place, okay? And from the close, 4 p.m. the previous day to the opening, okay, 6:30 West Coast time, okay, 9:30 East Coast time. I know I'm saying those time zones wrong, forgive me, but nonetheless, that time period, okay, that is still providing for opportunities for trading. And what you have a lot of times is companies release news during after hours, in the afternoon hours. Okay. So what happens? Well, companies, big time companies, even individual traders, retail traders such as myself, jump in on news articles about about companies that have things going on. And that news in a lot of instances causes huge spikes in price. And those are called gappers. Okay. And those are the types of trades or the types of tickers that I like to trade. And I'm going to explain to you guys why. I'm going to give you guys the detailed version of why this is a very powerful strategy for you guys to be very profitable in a very short period of time. So ALEC. Okay. I want you guys to look, for example, here. Well, let me go to the market open. Okay. You can see basically from the beginning of the market open, this thing, it had a slight pull, it still was slightly consolidating, but then it just rose up, gapped up. Then it consolidated, mini consolidation, push, mini consolidation, continue on with its rally, okay? Continuing on with its bullish pattern. Now, I want to show you guys what really got my attention. It was, and of course, I was alerted about this ticker on Trade Idea Software's, I have a scanner, a real-time scanner on the market, set up, and I was alerted about it, okay, due to the fact that it had consecutive bullish candlesticks, okay. And again, that's a custom built filter. If you guys have any questions about how to set those up, definitely reach out to me, ask me a question. I can show you guys how it's done. It's not very difficult at all, okay. But every day I use these scanners to help identify real-time what's happening in the market. Very powerful tool, okay, very powerful tool. But what caught my attention was this, as I was watching it. This large bullish candlestick. Now, I want you guys to look at this in price, in terms of price, what this thing did, okay? This thing opened with a low, or excuse me, it had an open of 35.36, a low of 35.35, okay? Hardly any bottom wick, meaning all the movement in price was bullish, okay? Closed at 37.79. Okay, so we're talking about a price jump of about $2 and what, 35 cents, family. Okay, now that is highly significant. Okay, highly significant. Okay, but again, this is how certain tickers move every single day in the market. Now, typically, I don't like to trade these types of stocks because the price, as fast as it fluctuates up, it will also fluctuate down. Okay, so I don't necessarily like taking trades with tickers just because they're moving fast and high at a very high rate of speed. But what I was able to notice with this particular ticker was that the price, as weird as it sounds, was relatively stable. Okay, the price was not moving extremely fast all over the place. Okay, so I was looking at reward. What is my potential reward? Well, history has already shown me that my potential reward here could be anywhere from $1 to $2.50 or more per share in a single minute. Okay. So what that told me was, and again, as I was looking at this brief period of consolidation, I was saying to myself, listen, I'm going to look for an entry point. Okay. Now, let's talk evidence. Okay. what I love about this ticker, you see how it's riding the 9. This is the orange line here you're looking at is the 9 exponential moving average, okay? And I said this once and I'll say it again. Tickers that have healthy trends tend to respect the 9. They respect the 9 exponential moving average. I said tickers with healthy trends, meaning that if they're not respecting the 9, if you have candlesticks that are closing way below the 9 and then doing a bunch of choppiness and then gapping up, those are not the tickers you guys want to trade, okay? Because the whole point about it is this. The way to be consistently profitable as a trader is to follow strict rules, okay? Now, if you don't hold your tickers to strict rules, then you can't be a strict rule trader because your tickers need to also follow strict patterns that specifically fit your trading style. If the chart movement does not fit your trading style, okay, if it's not disciplined to your trading style, then you should not take that trade, okay? I don't care what the risk reward ratio is. If it doesn't fit your criteria, then don't trade it, okay? And it's things like this that are helping me to become more consistently profitable in the market, okay, along with identifying trends as I did here. So nonetheless, consolidation, pull back to the 9. So my initial reaction to this candlestick was, damn, maybe it's going to just fall, like continue to go down. But I waited to see what the next candlestick would do, okay? And this is what I saw, you guys. And again, this goes back to like candlestick, being able to read candlesticks and understanding what it means. This particular candlestick opened at 38.63, 38.63, had a low of 38.63 and a high of 41. So I got in on this candlestick probably, I think it was about the break, maybe almost the break of this red bearish candlestick that preceded it. Okay. But once I was able to identify at about maybe the 30-second mark, okay, because again, we're looking at 1-minute candlesticks. Once I'm able to identify at the 30-second mark that this thing is probably not going to drop below its low, what I'm able to do is place a trade with a tight 20-cent stop loss. Okay. Now, that's my risk. I'm risking 20 cents per share on my position. Okay. My reward, $1, $2, $3. Do you guys understand when I say risk to reward? And I placed a trade. I got a good entry point, and this thing just hit. This thing just boom, shot up. And just like that, with one trade, I hit my profit target for the entire day. Okay. Things need to mathematically make sense. Risk reward ratio made sense. The trend itself, the chart itself made sense. Now, the thing that is very suspect, the only thing about this that I didn't like, you can see that in terms of the pivot points, this particular gapping stock was way above resistance, R3, okay? Way above resistance, way above pivot point price, way above, okay? So I don't particularly care for that, but gapping stocks tend to do that. And the other thing I didn't like was on the stochastic oscillator. You can see that, when I got in, it was already well exhausted above the 75. But interestingly, I'm not going to be able to zoom in so much here, but interestingly, the stochastic oscillator K does cross D at the moment of my entry point, which means that, it's indicative of a strong bullish rally, as well as the balance volume is also on the incline, as you guys can see here. Now, I talked about this tool. I'm going to say this and I'm going to get out of here. The on balance volume tool, this thing, if you just look at it, you can see that on balance volume rose through this entire rally, this whole rally from 33 all the way to 39, whatever it is, $42, basically $10 a share. Okay. Meaning that just looking at on balance volume, you could have placed a trade and rode this trade up to the land of profits and honey. Okay. But nonetheless, trade of the day on this particular ticker, ALEC. If you guys have any questions about this or anything else related to day trading, feel free to drop them in the comment section below. Like, share, and subscribe. I'm out of here.